Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Nicole and Dan, and of course another tumultuous week here in the UK in terms of political chaos. Some interesting memes going around, not least that it's now only 2 p.m.s till Christmas. Nicole, what have you been tracking this week?
Well, we held a briefing, Real Estate Media held a briefing in London together with Iberian Property on Iberian investment prospects, and it was incredibly well attended, which shows the level of interest in the area. Prospects look pretty positive. Paloma Relinco of CBRE Spain said that it's been a really strong year so far, with record prices for offices, logistics and residential. And foreign investors have come back in a big way, so they are playing a really crucial role. They account for 78% of all deals that have been done in Portugal and 60% in Spain. Across Iberia, prime office rents are increasing, and there's a lot of opportunities, especially to make assets ESG-compliant. For Portugal in particular, our experts said this has been a real turnaround year after 20 years of pretty sluggish growth, driven by really strong economic growth. In fact, the fastest growth rate in the Eurozone this year, with lowest ever unemployment rates and a lot of money coming from the EU to support this sort of transformation of the economy. So a really positive buzz around Portugal. And as one of our experts said, it's 3,000 miles from Moscow, so it feels very safe. And one thing also that's driving growth is the nearshoring trend that we've talked about many times, because until now, sort of Portugal had been sort of left out the growth in logistics, but now it's really catching up very fast. And this whole Atlantic corridor is becoming more and more important. And to demonstrate that, vacancy rates for logistic assets are 1% in Porto and 2% in Lisbon, which just shows the level of demand. So there are great opportunities there to buy assets and build assets, because demand is so huge. And another really positive thing that came out is the return of international tourism, obviously after travel restrictions been lifted after the pandemic. Is really galvanizing the hotel and hospitality sector across Iberia. Summer 2022 has broken all records, and it's both the sort of leisure beach destinations and the city destinations. Obviously, mainly the city leisure offer rather than the business offer, which is still suffering. But and they said the market is still fragmented and presents really big opportunities for consolidation. What were called sort of low conviction owners, so could exit the market in the next few months, in this sort of difficult economic times. And so the real professionals with the skills for asset management and the skills to reposition assets really have opportunities to grab some very good deals. The increase in revenue expected will compensate for rising inflation and higher energy costs. So that's another sector to watch.
Yeah, I thought it was interesting as well that there were sort of, positive views there across areas, but also including retail. So interesting to get a kind of positive view on that. And a big topic as well, of course, was the residential side. Dan, what have you been following?
Yeah, well, as you said, Richard, the week has really been dominated, certainly in the UK, by Liz Truss's resignation after just 45 days in office. But really, around the corridors of real estate, the ripples of the impact of the UK economy and the fragility there, or rather uncertainty following that mini budget, the absolute U-turn on that as well that followed with Jeremy Hunt. But they've been really principally felt through interest rates. And that's obviously had an impact again onto mortgage rates rising, adding to the cost of living crisis, which everybody is feeling right across Europe with rising costs for fuel and heating ahead of the winter. But all of that really is kind of making interest payments and refinancing real estate assets almost impossible, which is likely means that many UK office and retail property landlords are going to be forced into what many are describing as a bit of a fire sale over the next 6 months. An article in Biz Now suggests that pressure could slash capital values by as much as 35% in a really kind of destructive value process that will, extend even into prime properties. So, prime yields for UK property that currently sit at about 3 or 4% in many sectors could even push out to 6 or 7%, many are saying, in order to sustain new financing costs. But what the market really needs is some kind of stability and certainty. The FT ran with a similar story, saying that real estate investors are preparing for discounted deals as property funds are pressed to sell offices and warehouses which used to be a real bell of the industry, after coming under increasing pressure following that budget. But property funds have faced a wave of withdrawals, and they're going to have to sell many assets to meet those redemption requests. And that's echoed by many of the other stories around the market, such as in React News. They covered the Comerç Real's impending sale of its Espai Girona shopping centre in Girona. They value that at around 170 million euros. That comes when Comerç Real's looking to rebalance its portfolio and reduce its exposure to retail. That asset's quite like, it's 500,000 square feet, thereabouts. It's almost fully let, performed well through COVID, has 6 million visitors a year, has 120 retailers in there, including Fnac, H&M, Zara, Massimo Dutti, performing super well. They're disposing of it. So this is the kind of story that we're going to be seeing more and more of. Meanwhile, in residential, that's also feeling the knock-on effects impacting developers and house builders, pension funds. Landlords are reported to be overwhelmed by demand for rental property. They're looking at 13 applicants per rental property, and that average number of people registering has increased by 88% from a level of 78 to a record high of 147 between February and September. That's according to trade body Property Mark. So, agents are saying that whilst the number of house hunting tenants keeps climbing, the number of available properties to rent has flatlined. So I think watch the rental market is key over the next 6 months. In one of the week's environmental impact stories, Redevco Iberian Ventures, which is the JV between Redevco and the US private equity group Ares Management, they've acquired the El Corte Inglés department store in the heart of Barcelona, and they want to transform it into a highly sustainable mixed-use prime location, kind of indicating that Redevco sees a future in quality, sustainable retail, and that JV represents a total estimated investment of just over 200 million euros. Investors into real estate are looking very closely at ESG credentials. One of the key performers were Via Outlets, who for the third year in a row achieved its 5-star GRESB rating. GRESB, of course, they collect and validate and score independently benchmarking all ESG criteria. So to get 5 stars 3 years in a row, absolutely fantastic. And lastly, and some good news in the retail market, the White Company, which is a premium homeware retailer, they've led the charge by opening a new store at Silverburn Shopping Centre on the outskirts of Glasgow, which is where Eurofund Group and Henderson Park are giving the centre, the major regional centre, the kind of management and investment that it deserves, and really raising the bar for the quality of retail in that location.
Yeah, it's been interesting to see more retail stories picking up, and also a number of the stories that I saw in the week pick up some of the themes we've discussed there. Sort of in broader news, I saw the Netherlands announcing that it'll follow Spain in pulling out of the Energy Charter Treaty, which protects investments in the sector. And of course, the real focus of that was because it's hindering their ability to be able to reach their net zero targets. And energy also a big topic across the market there. We saw, you mentioned Comerç Real and Comerç Real buying into French wind and solar projects. Kajina also in the Low Carbon Alliance joint venture launching a renewable platform. So we're beginning to see a lot of this crossover in terms of the infrastructure and real asset side. And also on that, I noticed as well last week that Greek renewables supplied 100% of the electricity requirements for the first time ever. We're also seeing, logistics continuing to be in the market. ECE announcing that they were targeting their first international logistics scheme at Poland. Lots of focus around that. And also you mentioned there the sort of issues in the market and capital beginning to circle for that. I noticed as well Kingstone launching an opportunistic investment division. But at the same time, the sort of flip side of that is you have Blackstone saying that UK and Europe are looking increasingly good value. So just interesting to see how those areas are beginning to move. Thank you, Dan. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.